Hey guys, welcome. Our second session of our little crypto meetup in Band of Insiders. What I'm going to do is we just had our first session. I think it was a couple of weeks ago already. And what we'll do now is today we will build on that. So last time we built a small foundation about what is trading, what can we do, how can you level up your trading yourself, how should you arrange your portfolios, etc., etc. And we will zoom in shortly on that in a quick recap in today's presentation, and I will zoom into other aspects of the crypto world. And last time it was how to take advantage of the crypto world. Right now we're going to talk about crypto fundamentals and what is going on in the whole world of crypto, what is included, and what can we see, and how can you, we've been talking about a machine last time, a machine, your long-term portfolio, and to arrange that for yourself in the best way possible. And I'm going to show you some ways today on how you can do that. So talking about the small agenda, a quick recap. I've been talking about the machine, how to fuel this machine, and in the end, the second part of this presentation, I will give a quick market update since we've been having not a good couple of weeks to the end of the year, especially since we had to hold some uptrends and it didn't work out that way. So is it time to panic, or what can we look out for? And I will zoom into that in the end of the presentation. So for the ones who haven't been here the last time, quick introduction. So my name is Quincy Diepeveen. I'm working for a day trade company and I've been active in the crypto world since 2017. And day traded stocks, day traded crypto, and now fully into crypto because the potential that this market is having has so much more upside than you can get with stocks or trading stocks or whatever. Give the best example I can give, and I've been hearing it from other guys as well, but if you have a stock trade and it goes fully your way, you make in the best way possible, you make 10% and you completely nail that trade, for example. And with crypto, if you make 10% trade of 10%, it isn't even in the highest regions, right? So crypto is the industry that is giving us more potential upside right now and in the coming years as well, because it's a starting market, it's a starting asset class. So that's why I switched my view from stocks to crypto and to right now be fully into crypto with a long-term perspective. And next to that, I am working as a intelligent automation consultant and working for corporates. So that includes my view on finance and my experience on finance and how the world works with a macro view. So fairly shortly, and directly jumping into the quick recap of last week, and I've pinpointed some points that are important for the presentation of today. And the first thing is your portfolio, and your portfolio is the central point of everything, right? The portfolio you, me, and everyone else is having for itself is your machine, and your machine exists out of your long-term portfolio, which includes 80% in my case. So just use that as a rule of thumb. 80% for your long-term portfolio, 15% for swing trading, 5% for day trading. And that is the aim for yourself as well, because you always want to have the risk in the market in control. You want always to protect yourself. And what I've been seeing with myself including and with everybody else as well is once the market is starting to go up or to go down, eventually we forget to protect ourselves. And what happens when you forget to protect yourself, you don't use stop losses anymore, or you use bigger amounts for trades to gain some money back. And what I've been learning is that's the problem when we get too emotional, too enthusiastic. So we forget to protect ourselves. And this percentages, including the different perspective from your portfolio, is a way to protect yourself. Stop losses are a way to protect yourself. And we need to keep remembering that. And that's why I created for myself in Excel this tool to have a view on everything that is being happening with all my different wallets, with all my different portfolios, to have an overview and to see, hey, this is my current situation. Is this according to my plan? Yeah or no, and otherwise I can adjust it. That's the power of insight, and that's what I want you to create yourself as well. And as you can see on the right, on the top, this was the portfolio holdings for me from the last conversation we've had. At the top and at the bottom is the most recent updates from today. And you can see it's a living thing, it's changing. And the biggest change, for example, is in this case, less Ethereum, more Matic, and more Chainlink, since Matic has been growing in price, since Chainlink was in the ultimate buying zone. So I switched some Ethereum for Chainlink, for example, to switch it up. And if Matic, since it had a big uprun, if it goes over the 10%, I will scale something down, etc., etc. So that's the way you should look at your portfolio. This is your machine, and this is the machine I'm going to talk about, your portfolio. What else was important from last time is the crypto landscape. The crypto landscape you can create for yourself. And the most important thing to remember is that we use different platforms for different use cases. For investing, we want a platform that gives us stable yield. And it doesn't really matter how high the fees are, for example, because we are buying and holding. For trading, we don't need any yields, but we want low amount of fees, trade fees, for example, because we're trading. That's the platform we're trading on. For staking, we want to have the platform that is giving us the best staking rewards, or accustomed to the best proof of stake blockchain, so we can have the best profits for ourselves as well. And for the other ones, it's according to the NFTs or land or whatever. And we're going to zoom in a bit in this crypto landscape today. So remember this, remember all the different platforms we're going to use, because we're going to zoom in the use cases. And the other one is important to remember: price movements like today are not just news based. As you can see, news is only 10%, approximately 10% of what influences the price. Technical analysis, when people are looking at the same thing at the same moment and seeing the similar scenario, it's kind of like a self-fulfilling prophecy. So if everybody's seeing that the price is going to break out to the upside and people start putting more money in, you can see that the price actually goes up even more, because more people are seeing that, more people are indeed putting their money in and creating this kind of breakouts. But the most important one is psychology and how other people are thinking. We have two different kind of people. We have the retailers, also known as the dump money, and the institutional investors, hedge funds, etc., are the smart money. And the smart money are the ones who are controlling the environment, especially since I've seen some graphs today and last week, and it's saying that retail interest in Bitcoin is almost died down. So institutional investors, especially in Bitcoin, are running the game, and the way they trade and the way they behave and think about price movements, that is going to happen. That's what we include in the psychology aspect. So zooming into a few use cases today. So what I'm going to show you is a couple of ways to fuel your machine, and beginning at your machine itself. So in the beginning, in the recap, I showed you portfolio, long-term portfolio, and different perspectives and how you should arrange it for yourself. And in the end, it looks something like this. And you see in the middle the different portfolio that I'm having, and the difference between the last slide is right now I've divided it into sectors. And the reason for that is because it's really difficult to precisely aim for the right coin or the right one that is going 10x, 100x, 1000x. So what you want to do is you want to have a bit of money in every different sector that you think is important. So as you can see, I made a sector for Bitcoin and I made a sector for Ethereum. I have no Bitcoin at the moment, but I have a lot of Ethereum. I have a couple of coins in DeFi. I have a couple of coins in the Metaverse. I have a couple of coins in interoperability. So exchanging from blockchain to blockchain, connecting blockchains to each other. I have somewhat in scaling in the form of Matic or Solana. I've created a small part for speculative coins, and those aren't the Shibas and the Doges, but those are the more or the less known names in one of these spaces. To In this case, DeFi includes Chainlink, for example, but speculative can be in Chainlink, but could be Loopring or a smaller coin, for example. And a small part NFTs. We'll zoom into NFTs as well today, but NFTs is an area that I want to be more involved in, but I don't have the knowledge right now to actually let's do it like this. I have more knowledge about the crypto space, so why would I directly pump more money into the NFT space if this is the area where I make my money? So I'm step by step gradually stepping into the NFT space, and it is an area I want to be involved in. So as you can see, I've been involved in all these kind of areas, and you have social tokens as well, etc., etc. So instead of timing the exact coin, we're going to be exposed into different sectors to increase our chances of being involved in a sector that's going to explode. NFTs can explode, and I will swap my money from that I made from NFTs to Metaverse. Metaverse can explode, and I swap my money from Metaverse to speculative, etc., etc. So it's a living thing. Think about it in a sector way. Next to that, you see on the screen that I've been dropping down some words, and these are all ways to fuel your long-term portfolio. Last week, we've talked about day trading and swing trading. I've showed you some methods, just the beginning, but just to give you an idea about what it is and how you can use that for yourself to fuel your portfolio. And today we're going to zoom in into the other ways. So interest, NFTs, metaverse, staking, yield farming, and synthetic trading. And what we're going to do today is we're going to slightly touch it. I give you an explanation and I give you an example, and then we'll move further, because today is just an introduction to give you guys the idea about what is actually possible in the world of crypto and Web3 and everything that's been going on behind the scenes right now. That's what we're going to do today. Just so you can be aware about what other opportunities you have. So let's say you trading or swing trading is not the thing for you, but you're looking for a way to improve your portfolio. You can flip NFTs, you can gain interest, you can stake, you can yield farm. And synthetic trading is one I personally actually got really interested in. Let me see if I see some messages. If something's popping up. Oh, if I have some I can't see you guys. So if there's some messages, just interrupt me, right?
Oh, sorry. I just wanted to ask. It was me.
Yeah, go
What
ahead.
kind of coins did you mention in the interoperability section?
Interoperable. Yeah, it's a difficult word, especially if you're Dutch. So let me zoom into my portfolio as well. Interoperability is the connectiveness between blockchains, right? So in this case, I have for myself, I have Polkadot and I have Chainlink, because Chainlink is an oracle, and oracles are connecting things to each other. See, Chainlink, see the crypto blockchain world as all different companies, and Chainlink is the highway that connects all these companies. Polkadot as well, it's connecting things to each other. That's on interoperability. That's the last time I'm gonna say this word. So yeah, that's the one. And just be focused on the best, most valuable coins, right? For your long-term portfolio, don't buy any smaller ones like Mirror. Mirror is the one I'm going to cover in a few, but focus on the bigger, most settled names for your long-term portfolio, because those have the least amount of risk and insane growth possibilities. So yeah, those are the ones. Polkadot and Chainlink. I have Uniswap and Anchor for DeFi. Engine, and I used to have Sand and Mana, but I switched everything up for Metaverse. Mirror, in this case in speculative. Matic and Solana in what's called scaling. So, and I think, did I miss anything yet? Metaverse, scaling, Bitcoin, speculative. No, that's it for now. And it goes. It will grow and it will continue to evolve, and I will switch. Since Engine had a big run, I took some out of Engine. I bought Mirror. If Mirror will have a big run, I will take my profits out of Mirror and we'll put it in something else. So it's a living thing, and it will be changing bit by bit, especially if in the coming year we're going to see a bigger run, right? Not everything at the same time will run. These market phases go from bull market, from Bitcoin to Ethereum to high caps to lower caps to altcoins, and mini cycles around and around the whole bull market cycle. So treat it as a living thing. So how to fuel the machine. And interest is the first part. And interest is basically a really simple concept. It's actually like the banks are doing and have been doing for the past years. And the banks, they wanted to create liquidity for themselves. So they wanted to get as much money as possible. So they said, hey, if you put your money on our bank, we will give you a 5 or 10% interest rate. Not right now, but 20, 30 years back in the beginning of the banking system. So they basically created an opportunity for the banks to have a larger amount of money so they can start lending money to people who wanted to have money and who needed money for investments. So they can give an interest rate for guys like us to put our money on the bank and give a 5% interest and rent the money out for 10%. So they created a 5% profit gain on money that wasn't theirs. And that is the exact same as the BlockFi's and Celsius are doing. They're giving us an interest rate. It's a centralized exchange, so it has know your customer, etc. So they're giving us interest to put our money over there so they can lend it out for more money. That is interest, and that is how you can get interest. It's the most easy way to for your long-term portfolio to create more interest on your account. So in this way, you can start the effect of compounding, right? Bitcoin, you get 5.5% interest a year. So you get more Bitcoin every month paid out, and every month you get 5.5% gain over more Bitcoin. So it's a compounding effect, and at the end of the year, you will gain more and more and more, and it will continue to do so. So that is interest. Really easy concept, really easy to do, requires no extra effort. Web3. And as we've been going to the topics, and as we will go to some topics, like I've been saying with NFTs and like probably with Web3 as well. I'm not an expert on Web3. I know what it is, I know what it can do, and I know how to use it. But Web3 is important for the rest of the story. So it's a collection of JSON libraries that let you interact with the Ethereum node. So in short, it's just an API that you can use so you can work with the blockchain. So you don't need passwords, you don't need a login name, you don't need to provide everything else. You get to be anonymous. And I will show you an example over here. This was I forgot to show you this. This was how Celsius is looking. So you can have stable coins, buy stable coins, get an 8.5% interest rate, and you can buy, let's say, where's gold? So you have gold and you have Matic, get 9.10% over Matic, you get 9.02% over DOT, Aave, etc., etc., etc. So this is how you get interest. This is an example of Web3. So this is Uniswap. Uniswap is a decentralized exchange, and decentralized exchanges are in this case DeFi. And what they do, you can swap your coins. And swapping your coins will be important for the rest of the story. And this is how you do it. So what you do is you click on Launch App. And this is the Uniswap exchange. And as you can see, I'm already logged in. But I didn't put any username in or password in. What I did, I was connected. So I created a MetaMask wallet. So remember that I've been saying that in the middle you have your Trust wallet, your decentralized exchange, Trust wallet, MetaMask, all the same, because everything that you're going to do decentralized is working with a decentralized wallet. In this case, a MetaMask. And as you can see, I'm already logged in. And this is the way that they're seeing me. So they're not seeing Quincy Diepeveen is logged in. They're seeing address blah, 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 blah is logged in. I have 0 Ether. I have no value because I created the wallet for just this introduction purpose. But this is the only thing that the guys know from me. So what I can do is if I have my money in my Trust wallet or my MetaMask wallet, and I want to create another coin, and that is important for the rest of the story, you can swap your tokens over here. So let's say I have Ethereum on my wallet, and I want to create wrapped Ethereum. For example, you can say, hey, I have 12 Ethereum, and I want to interchange into blah, blah, blah. You click on swap, and you create it. It will cost a fee, but you can create other coins, and that is the way that's important for the rest of the story. You can see you can have all different coins, and if you can't find your coins that you want to create, you have red BTC, you have all the stable coins of Uniswap, you can add coins to the list. So this is normally I can do it on coin market cap. So what you can do, if there is a coin that is not on this list, you can go to coin market cap, click in let's say fish. There was an example, Polycat Finance. We will use that in a bit, and it's on the Polygon network. Not sure if it's going to work, but you click on copy address and you click to the exchange. You click on this, and oh yeah, it's too bad. It's on Ethereum net. I can only go to my wallet isn't allowing it. Let's see if it works. Polygon, switch network. Let's see if it's working. This is just freestyles this. Okay, let's see if I can find it right now. Select here, selected token, mid token. Okay, it's not going to work right now, but you get the idea. You can find a coin that is not on the exchange or Uniswap right now. You click on copy the address. You click on, hey, I want to swap Matic into whatever coin you want. Chainlink or fish in that case that we've been using, and you can swap it, pay a fee, and now you have your change your Matic into Ethereum, Chainlink, fish, whatever you want. That's the use case of this this particular thing. And this particular, you have Sushi Swap, you have Pancake Swap, you have all the different things, but that is the use case of Web3. I can swap my coins. Nobody knows that I'm here. Nobody knows that I have this particular amount of money, and nobody knows actually who am I. As you can see, I'm user OX blah 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 blah. So nobody knows who I am. Going back to the presentation, Web 3.0. That's the important thing for the rest of the story, because what we're going to see right now is another part of fueling your long-term portfolio, and that is staking. And staking is actively participating in transaction validation on a proof of stake blockchain. So basic knowledge, blockchains have two ways of working. You have proof of work blockchains and proof of stake blockchains. Proof of work is when transactions happen on the blockchain, and every time there's a new transaction, there needs to be a new block added to the blockchain. That's how you get the blockchains, right? And in this block, you see the data, you see the wallet address, wallet blah blah, transfer $10 to wallet blah blah. To make sure this is a right transaction, people and miners in this case need to validate these transactions to following certain criteria to add it to the current blockchain. And proof of work, that is using as much computer power as you can to solve these complex calculations, and the first one who solves that gets the reward. So the one who creates the new blocks on a blockchain gets a reward for that. That's why you always need to pay fees, because these fees go to the miners. And that is staking on that is a proof of work blockchain. Proof of stake is when there's another way of validating, and it means that not the company or the people with the fastest computer power, but the people who are participating on the blockchain by staking, so by locking away some of their Ethereum, for example. So let's say you can apply and validate a block if you have at least 100 or 1,000 or 1,000,000 ETH stake. I don't really know the specific number, but if you have at least 1,000 ETH staked, you can start validating and participating in this validation process of the blockchain. So you have proof of work based on computer power, proof of stake based on how much you have put into the staking wallet or locked staking, right? So in the case a validation process goes wrong, or you are flashing the system, for example, you are what happens is that they will get something of your staked portfolio out of the locked value. So you actually lose Ethereum if you fuck up the system. That is proof of stake. And proof of stake is what these guys are doing. So you can see Binance, and Kraken, and you have Gemini, and those are all centralized exchanges. We're giving you, for example, in this case, 11.5% for 30 days if you stake Polkadot on Binance. And that means that you will get 11.5% for 30 days. So 11.5% per year for 30 days. So it's I'm not sure how much it is per day, but the interest is good. But it means that these guys are actually accumulating as much Polkadot as possible to stake and validate these proof of stake blockchains. So what they are getting is, I think if you could do this for yourself, you maybe get even 40 or 50% for your validation process, because the fees are really high. So the rewards for the miners are really high. So what Binance is doing is actually validating the blockchains, and they get a reward for that, and they split the reward with us. So they get 60% and we get 40%. I think it's even less. They get 90% and we get 10% for something like that. So they're accumulating as much Polkadot as possible so they can stake as much Polkadot as possible. We can't do that ourselves, or you need to be a software engineer and have really time and be proactive in this, and then you can earn a lot of money if you can do it for yourself. But for this, in this case, Binance and Kraken and all these guys are validating the blockchains. They get a reward and they give a small part back to us. That is staking, and that is centralized staking. You also have decentralized staking, and that is this, for example. This is Onyx, and this is the one I've been showing as well. It's not the most, it's just an example, so you don't actually need to go to Onyx right now. But as you can see, I'm already connected with my MetaMask once again. Decentralized exchange or decentralized staking platform. And I'm connected right now with my MetaMask because it's decentralized and I need a decentralized wallet. You have Vault, and we'll go into Vault in an instance. Let me see if I get back. Let me see if I don't have to get the right page. So Onyx Finance. This is Onyx. Go to the site. I'm connected to the MetaMask, so it's not showing us the perfect example right now, but what you can see, you're connected to your wallet, and actually this is the part that it's showing right now is yield farming, and probably because I switched to the Polygon network. Let's see if I can change it back to the Ethereum network and what will happen. Yeah, okay, perfect. So I'm back on the Ethereum network with my MetaMask wallet, and as you can see, we have a dashboard, and what I want to do is I want to earn and I want to start staking. So you can start staking Onyx, you can start staking as Onyx. So there's probably another coin together. So swapped together with an Onyx coin, you can start farming, you can start lending, and you gain a particular amount of interest on this. So that is staking, in this case farming, but you can do liquidity providing, you can go whatever you want, but it's a different way of staking. And what is happening right now, over here, the difference is, so this is centralized and this is someone else doing it for you, and this is a platform that is decentralized, so nobody knows what you're doing, and so you can swap and change and create and unstake everything you want without anyone noticing. So those are different use cases in case you have, let's say, more money, or in case you want to experience something or experiment some kind of things. Is another way of doing it. If you just want to be, you don't care about centralized or decentralized, Binance or Kraken are the most easy way to get higher percentage yields for a particular time period. So as you can see, maybe I can go to AXS, because Axie Infinity actually gave 25% for 7 days. You get high yields. So we can find as well popular coins. You can go to liquid swap, you can DeFi staking, whatever. There's so many opportunities right now. Let's say I had Anchor. Let's see if we can find Anchor on this wallet. So there's no availability for Anchor. What else did I have? I had Mirror. Mirror is not available. I had Solana. So So we have for Solana an opportunity, do an investment for 130% APY. Remember to yourself, and remember it's really important that the higher the yields, the more risk you have. And for Solana over here, just by staking, log staking, 8% a year for 60 days. Mirror in this case is over here as well, 1%, so it's not really that tricky. But as you can see, you can do whatever you want. Luna, all the coins, Axie Infinity, 25%, whatever. That is staking, and that's how you can use staking for yourself. Two different ways. And right now, zooming into yield farming. Yield farming is staking, but a more complicated way of staking. And what I mean by that is yield farming is extremely risky. And you need to be very proactive, but if you do it and if you are able to fix it, you can gain so insane amount of money. And basically what you're doing is so you're lending or staking crypto in exchange for rewards, and it's always measured in APY. And you're creating, so you're swapping coins, let's say Matic and whatever random coin you want, to create a new one. And that is called blah, blah, blah. By providing that new coin to a liquidity pool. So I know it gets confusing, so no worries, it is a really confusing story, but you need to have the first indication on how this works. You have one coin, you have another coin, and by swapping them together via Uniswap, you create a new coin. And let's say that it is a new project and that project wants to have some liquidity. The project is paying high interest yields or high interest yields for other people to create that coin because it's providing liquidity. And that's what they want, because if they have liquidity, they can start growing. So they can give off these high percentage yields. So this is how it looks like. This is Polycat Finance, and the interface has been improved very, very good, because a couple of months ago when I was using this was 100% certain scam when you looked at the interface of the website, but right now it's looking actually quite clean. You can see there's 25 million total value locked right now, and this was the one that was fish, but you go to vault. And as you can see, if you create fish, you gain 64% in interest annual per year. And that's regarding to how long this pool is existing, you get a 0.18% interest on your coins daily. It's insane. But as you can see, we have fish hope combination is 223% per year, 270% per year. 80 and blah, 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 63, 160, 437 rep ETH with Dino, no idea what that coin is, but you can see there is 19.6k already in total value locked. In fish, I think no one has ever heard of fish, is already 1.40 million. So a lot of people are doing it with a lot of money. So 430% per year, that is 0.5% interest per day. So you remember that over here you could have gotten 3% if you staked a BUSD, you gain 3.71% per year. And if you do this, you gain 0.46 per day. So that's the power. And the problem with this is that it's first, you need to swap to create a token. Let's say we've taken fish as an example. So you need to swap this to fish. It will cost you an amount. Then you have fish, and you probably need to, in the case of this, you could have just staked fish over here and gained interest. But as you can see, if you want to use this, there's no, probably this pool is closed right now. But if you want to use fish, you should interchange it with Wrapped Matic. So what you need to do, you need to go to Uniswap, create some Wrapped Matic. And yeah, probably need to, I have no idea how to create Wrapped Matic, but you need to have some Matic, and you can wrap it probably over here as well. So you have Wrapped Matic, and you want to interchange it with fish to create a token that's called Fish Wrapped Matic. And then if you have that, you can put it in the liquidity pool over here to gain your interest. And as you can see, 12.2k dollar is already in, so a lot of people are doing it, and the pool is probably closed right now, but you would have expected something like this to be happening. So the interest and the rates of yield farming are actually really high. But as you know, I remember I have been saying that these interests are only high because the risk is so high, because you have two risks. One is that the pool is closed and you need to unstake, and people are getting their money out earlier. So you have a problem because you did not get out quickly enough. So you need to change from pool to pool. Since this might last for 1 day, this might last for 30 days, this might not, you have no idea. As the liquidity is full, the pool is getting close. You need to get out quickly, unswap everything, swap everything to something new, and go to the next one to get your pool and interest rate over here. If you're really good at this, this is a real good use for your money, but it's really difficult. The other one is the risk on impermanent loss. That means, let's say you buy for $1,000 red Matic and $1,000 fish. Matic is a stable one, so Matic is around $2.5, but fish is not one that anybody else has heard of it before. So probably is an unstable one. So let's say your $1,000 of fish, if fish crashes, you only have $500 in fish left. And your Matic is still 1,000 probably. So you have a 500 difference. That's your impermanent loss, because the difference between these both coins, you can't get them out at the same amount that you've been had before. So the difference is, and the impermanent loss is a big risk, because you're most likely swapping and creating coins with a stable one and an unstable one, or two unstable ones. So if the one changes more than the other, you have a risk of not getting everything out. And that's a problem, because you can't get everything out, and so you can't profit 100%. So remember, this is a way to earn a lot of money, but don't get tricked, because a lot of money and high interest is getting you into a lot of trouble if you don't have enough focus on it. That is yield farming. And one of the things I'm very excited about is synthetic trading. Synthetic trading is a perfect example is a stablecoin. A stablecoin values the dollar, right? So a stablecoin USDT, for example, is always somewhat around $1. So it's a position, a stablecoin in this case, that mimics the dollar. And both have the same risk to reward ratio, but instead of having fiat, you have crypto. And a big change that is happening right now and has been happening for a couple of months is this. This is Mirror. Mirror I invested in as well. So as you can see in my portfolio, I have a small part Mirror right now. And because the following use case, Mirror is also, you need a Terra wallet, so you need another wallet as well. That's why creating this landscape for yourself and make it really insightful is so important, because you have a wallet for this, you have a wallet for this, you have a wallet for this, you have a wallet for this. For Mirror, you need a Luna wallet, a Terra Luna wallet. So this is a use case for Luna. So you can connect it, and what you can do is you can trade stocks with crypto. So you can buy Apple, Mirror Airbnb, Mirror AMD, Mirror Amazon, Mirror Arc, and Mirror Alibaba. And you might think by yourself, why the hell would I buy stocks with crypto? What the hell, man? What a stupid idea. Let me tell you like this. For example, in the beginning of the year, I wanted to invest in Arc. Arc is in a big investment fund, and it's focused on technological evolution in the coming years. So I think, hey, that's a good use case. I want to get more exposure in the in the innovative sector, but I don't want to cherry pick one or two Teslas or Amazons or CRISPR or whatever. So I want to buy Arc. But when I wanted to buy Arc, I couldn't buy Arc because I wasn't a resident of the United States. There were no American brokers I could choose, and if I wanted to invest in Arc, I had to buy CFDs. So it's a whole way around with more risk, etc., etc., etc. Right now, what I can do, just from a guy from the Netherlands, I can buy mirror, so I can, let's say Apple, I pay USD to buy mirror Apple. So it's mimicking the Apple stock. So I can trade right now. I'm not doing it right now, but I can trade Apple via buying it via mirror. So I can buy ARK and invest in ARK by just being in crypto. So this is, in my opinion, is so huge, because not only in the Netherlands, but what about people in Africa and South Africa that normally could not buy American stocks, right? American is the biggest stock market of the world. Everybody wants a share of Tesla, etc. But normally Tesla was $1,000 or Amazon is 3,000, right? So let's say people from Africa can't buy the stock at once, so you can't buy fractional shares. But right now you can. You can buy 1/10 of Amazon. You can buy 1/10 of Tesla. So people are getting exposed into this world by crypto. You can go long, you can go short. There is no capital gains tax. There are no limitations, and you earn staking rewards. 5.4% for Mirror Alibaba, 9.8% for ARK, Airbnb 5.44% staking rewards. So this is huge. It's a connection. It's synthetic trading. It's a connecting with Luna, with the Terra Luna, with the ecosystem that's exploding. And the demand, in my opinion, for this will be very big, because it's a bit under the radar right now. Not much people know about synthetic trading. And probably it's in some kind of beta phase, right? So there will be some flaws and there will be some things not working. But it's an idea to think about for yourself as well. Let's say, why the hell would I buy Apple, or why the hell would I buy Airbnb if I have to pay taxes, if I can't buy fractional shares, and I don't get any dividends? But over here you get 5% dividend per year, 5.4%. So another way to think about these kind of platforms. So you need another wallet, but the reason is you can do other things. You can buy Facebook, you can buy Google, Goldman Sachs, whatever. It's another way to think about trading. And once this gets under the attention of other people around the world, they probably will have the same idea, because the market will be growing, because all the people around the world can now buy Microsoft. And normally it was only limited to the Americans. More demand, higher prices. Fairly quickly about NFTs, because like I said in the beginning, I'm no expert in this area. Non-fungible token. It's a bit of data stored on the blockchain, and it's unique. And you can do that by going to OpenSea, for example, CNFT, Cardano network, Solana network, Ethereum network. And what I do when I'm starting to get more exposed into the NFT world, I go to OpenSea and click on rankings, click on the 24-hour change, and you can see the biggest changes in the NFT world right now. So the most activity. So you have the Bored Ape Chemistry Club. I've been watching this one, the Writers Room, and sadly I haven't bought yet, but I was watching it from 0.2, I think, with the floor price. But as you can see, this is an NFT that is giving you tickets, just tickets to be at a certain moment in time on this Metaverse boat. Yeah, what the hell, Metaverse boat? What a stupid idea. Why would I buy 0.6? So I think, what is it, $1,800, $2,000 to have a ticket on a Metaverse boat? Because it's exclusive, and with the exclusiveness, you get access to the boat with other people that have bought this as well. And over there, just like in the Snoop Dogg Metaverse, you can buy a ticket, and when you're entering that area, you have a festival, you get souvenirs in the form of NFTs, you get Snoop Dogg glasses, you get this, you get this. And these glasses, I think the tickets for the Snoopverse were something like $2,500. But there was a very limited amount of Snoop Dogg glasses available, and those were just randomly dropped, and those were selling a couple of weeks ago for $5,000 for 12 ETH. For 1.2 ETH. So immediately flipping your ticket to a higher product. It's exclusive. Look at the Board A Yacht Club. People are buying to be part of a group, and for exclusiveness and for access to other parts. So as you can see, you can buy tickets, you can buy keys, or you can buy a vault over here. And there's a rising, guys. There's activity. People are buying. You can see the activity is increasing. Every time there's bidding, 8 minutes ago, 25 minutes ago, an hour ago, 2 hours, 2 hours, 2 hours, people are winning this, wanting this. Someone is bidding 7.5 ETH for this vault. 7.5, 9.5. Oh, he's willing to buy this for sell this for 9.5 Ethereum, $36,000. What the hell? But you have to switch your mind, right? Even I find this tricky. But what is an investment of 36,000 if you can make 50,000 back in a week? And this is an area where you can make money, even if you or me or anyone else find it very strange. This is an area where there's a lot of money being made. So look at it from a different mindset. And the last part, I've been mentioning it with the Snoop Dogg Metaverse or the Metaverse in general. And I want to show you two things. So this is OpenSea again. You can buy land over here. You can see the floor price for land is 3.26. And you can buy different land lots to earn money, to create your portfolio, to diversify, because these are all ways to diversify, not sure it's the right word, your portfolio. And you can see people are creating land and buying land. And as an illustration, I wanted to show you an example of a real life metaverse right now. So this is, you have Sandbox, you have Decentraland, and this is Crypto Voxels. And Crypto Voxels is an area where you can actually jump into the metaverse already. So let me give you an example. And this is exciting, guys. I've seen SpaceX, I've seen Pepsi, I've seen yachts, I've seen whatever. So this is the Clay Ape Club. Look at this. It's insane what these guys are building. A restaurant, people are selling their NFTs. Maybe some exclusiveness. This is an area for a yacht, whatever. You can see, maybe you can go to SpaceX as well. The world is growing, guys, and this is the metaverse already. And if you go inside, you can see people selling everything, all the NFTs that they have. Maybe this is not the right area, but let me see if I can find another one. Let me see if I can find another one, because I've been to SpaceX today. This is Pepsi. So we're going to Pepsi right now. It's the Pepsi Music Festival. It's the Pepsi World. You can see the cards and you can see Pepsi Music Club. There will be content in here in the future. If you want to blah, 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 you can contact over here. And let me give you a quick example of how people are selling their NFTs. Let me see if I can find one. It's kind of like Minecraft. I've been playing it in the past. You can see it looks like this. And there are different parts of the world. I can't really find something that is looking good right now. Let me see if I can find another example of a bigger world. This is the one, the Ape Yacht Club. We've been here. Now let's see what this is. But you can go here. If you go to cryptovoxels.com/play, you can go into this world. This is a first indication of how a metaverse is going to work. Welcome to the Europe Virtual Yacht Club experience. So people are selling their NFTs here.
Put on the turntable.
Yeah, okay, whatsoever. So, to give an indication about, this is already happening, man. This is already happening. People are buying. Stores are now getting started, and the building aren't really finished yet. But you can see in a short amount of time, the world is changing, and you can see Pepsi. I've seen SpaceX. I've seen yachts. I've seen real big Board a yacht club exposures where you can buy NFTs. So I think Nike is already selling shoes over there. I'm not sure. I haven't seen Nike before, but you can buy things there. It's a store, and people are going in there. They have traction. They have 10,000 of people visiting per day to your country, to your land. So just to zoom, let me see where my presentation is. Oh yeah. So to give an idea about other things that can fuel your portfolio, we have interest, we have Web3 opportunities, we have staking, we have yield farming, we have synthetic trading, we have NFTs, and we have the Metaverse. So this was the first part of my presentation, and what I want to do right now is zoom into the market. What has been happening? What can we expect? I will make it a bit quicker, but what can we expect, and how can you anticipate on what you let me see if I can share my other screen as well. Yeah, so probably you can see it right now. Yeah. Okay. So what has been happening in the crypto space? I will quickly jump into my latest update. So first things first, I want to give an indication about a bit of a warning signal that I've been seeing, that people are using indicators like the Fear and Greed Index for the different purposes, right? Right now, in times of uncertainty, you're looking for answers, and if you see Fear and Greed at 20 and Fear and Greed at 40, those aren't buy signals or sell signals. Those are just sentiment indicators, and you don't want to use them as a buy or sell indicator. Just wait and don't put your trust into these indicators, because it's understandable, but it's not right, because you're going to make the wrong decisions if you buy at 41 because you think fear and we drop to 20. Wrong idea. And in times of uncertainty, I wanted to point out to a couple of guys that I get my information from as well, that I think are trustworthy. One of the guys is this guy, Will Clementi, on-chain analysis. Another one is Dan Tapiero, big hedge fund manager. And another one is Raul Paul and Real Vision. And this is an indication of his portfolio and how the AI Vision, I think it is, bot is creating their portfolios as well, with the most stable, least amount of risk coins of the moment. And it's important that in times like this, focus, don't get caught in these guys. Oh, Bitcoin to zero, Bitcoin to 200k, Bitcoin is inescapable. Yeah, what the hell, man? No, this is wrong information. And basically what you want to do is you want to create for yourself a plan on the charts to see where can the price possibly go, what is realistic and what is not. So I've been doing it myself as well, to shortly analyze what has been happening in the previous markets, what has been happening in the previous runs. And it's normal that you make price predictions. It really is. But don't focus it on random YouTube guys. Focus it on analysis, right? So quick an indication of what you're seeing right now over here. You can see the up run in 2017. You can see the maximum potential. I've used some indicators. You can see we've been stopped at this particular number. You can see we dropped down to the ideal entry, and I can see how are these runs similar and how can we compare it to what we have been seeing. So basically, we should have stopped at the 86k to create the same scenario, but as you know, scenarios have changed. We had a bear market, and now we formed previously a support one. We had an ideal entry over here. So I'm looking right now at an ideal entry, if we're going to reach it, of 30,000, 35,000, 40,000, somewhere in this area. Remember, there is an increasing amount of buying power, so I'm not sure we're going to make it. That's why you always need to step in gradually and don't wait for the perfect opportunity, because the perfect opportunities often don't exist. They have an indication about where can the price go, what is the maximum potential, what's realistic, and what is my worst case. And based on this, I can see an opportunity in recreate this over here at 35k, something like that. Normally we would have been running to 83k, but we have been seeing it over here as well, and halfway shakeout. You can see we're at the same level right now, and we're experiencing a bigger halfway shakeout. in the best case is everything goes through, we will go to a maximum of 300k. So people are saying higher are actually insane because they don't know what they're talking about, because just random spiking numbers. If everything goes well, if we have the best year ever, if all the institutions start buying at an instance in the coming year, the maximum potential is at this area, so around the 300k. And I've been using another chart for this as well, and those are aligning. You can see over here, if we break out, maximum potential is around 300k. That's the maximum, but don't get fooled, because there first are a lot of areas we need to break through. We need to break through this, we need to break through this, etc. So don't get fooled. So I wanted to give you a quick indication on how to trade in these areas. And what I did over here is, this is Ethereum in 2019. And as you can see, Ethereum had a big drawdown from the all-time high until the weekly support zone. I've been always talking about weekly support zones, right? 92% drawdown with two big resistance lines. What is the moment to actually buy? You always want to wait until we have a weekly resistance, till we break out over these resistances, till we retest it once again, and then break the level to break. In this case, it's a higher time frame idea, but just to give an indication, right? So what has been happening? So you can see in 2019, we broke through the first resistance with some kind of effort, but we're still into the zone that is dangerous for us. Trading up, trading down, probably going to retest once again into that particular area. But the weekly buy zone is an indication of an area where you want to buy. So as you can see, we're hovering, and we're breaking out. First indication of a trend reversal. Over here is your perfect entry, but you can see we broke through resistance 1, resistance 2, and right now we have a level to break. So this will be your safest entry. This will be your most risky but most profitable entry. And if we break the level to break, because that is our swing high right now, then we can expect the price to go higher. So have a look at what happens. So this is on a weekly time frame. We test it, get rejected, and once we get rejected, we get our ideal entry because of our weekly buy zone, and we're going to the top once again. Not breaking it, so we don't enter yet, and we're breaking it. And the moment we break it, we retest it. But the moment we break it, you can see it is confirmed as support right now. Break, confirmation, and skyrocket. That's how you want to trade. And this is an indication on how you should use it for yourself as well. So what you need to look for is, so this is the ideas over, but what you need to look for is similar scenarios. I always talk about in downtrends, weekly support levels. Indication about mirror. This is mirror. We've been talking about mirror in the previous slides. What you can see in mirror had a 83% downtrend since the all-time high, behaving in a downwards channel. And it's only interesting because we see right now, we see a weekly buy zone, and I am having a trigger over here. The moment mirror breaks the $293 level, it's getting interesting because we're in a bullish pattern, breaking out of a downwards trend. And if we break the level to break over here, then just like the Ethereum example, it's getting interesting because there's a lot of upside potential, but only if we break through this and this. So it's a one to watch, but not one to step in right now. Uniswap, similar example, weekly downtrend, weekly buy zone, 70% down, 2 resistance lines. We broke already 1. We can break number 2. Probably this will be your level to breaks in the end. And this as well, you can trade it from over here to over here. And once we break this, we have more upside potential to go. What has been happening on chain? So on chain is the back end of the markets, and we are getting a overview of the year. So we've been seeing in the 2021, we've been seeing the price of Bitcoin rising 78%, and Ethereum and other ones have been rising even harder. So even though we're in a bearish sentiment right now, you can see even though we had a bearish sentiment, if you bought Bitcoin, you at the 1st of January, you will be 78% up. You can see that currently 18% of the market is in a loss. You can see that the exchanges saw an outflow of 67 Bitcoin, 67k Bitcoin, so that's bullish. So there's less supply on the market. You can see that long-term holders added more than 1.8 million Bitcoin to their holdings, and short-term holders amount declined. So more long-term holders and less short-term holders is bullish, because long-term holders have a longer-term vision and a longer-term perspective to hold, and that's bullish for the price. Open interest doubled. The mining hash rate finished up, even though we had a complete drop down from the miners who moved from China to America, and the miner revenue is up. And as you can see in the charts, we started at 29,000 and we're ending somewhat around 45-ish. You can see what else is important. On-chain data, so supply outflowing the data. You can see in the beginning, the dominance of the long-term holders is growing, so that is bullish. You can see the balance on exchanges is declining. What else important? The futures open interest. So as you can see, once we peak out, you can expect a drop. So once the interest is peaking, it's some kind of pressure on the markets. And what else is important? So this is the hash rate, had a 41% drop, or 53% drop actually, and right now actually almost at all-time highs once again. And the miner hash rate and profitability. That's happening on chain. Zooming into what the other markets are doing. So the DXY is the dollar is getting into a resistance zone and breaking to the downside. And if the dollar loses value, so this is a rising wedge pattern, and the rising wedges always move to the bottom of the wedge or the top of the wedge, whatever you want to call it. And in this case, the dollar could lose 3% value, something like that, from the point right now. So if the dollar loses value, that's bullish for crypto actually. You can see gold, you see the S&P 500 breaking out to all-time highs, even though we had a resistance. So just an indication with the declining volume that there's something going on that is not right. Amsterdam Stock Exchange as well, parabolic uptrend. Real estate is moving to insane new heights. So the market has been exploding, and there's no real reason other than that the dollar is losing value. But the dollar actually getting less valuable, so you can see the chart over here, would be a good indication for Bitcoin. So Bitcoin is the one we are willing to talk about and we need to talk about, because what you can see in Bitcoin, we have been losing our trend that we've had since the coronavirus. 20th March, we had a solid uptrend that guaranteed us of 1,500% profit in 686 days, but we've been losing that level. Created a new trend line, the orange, but it's a weaker trend line. So the profit that if we held this trend line, we can expect a 63% profit increase in 203 days. That is much less than what we could have expected here, a 30% in 70 days. So remember that losing the trend line is not the worst case ever, but you can see that it's a slightly slower inclining trend line for us to see a different trend change. Most important level is this one. It's around the, what is it, 32k, and this one at 41k, 40k, 41k with a wick. Those are the ones to hold. Otherwise, you see a trend change. You can see it in technical analysis terms. You can call it like a head and shoulders pattern, in which way we're going down with a bearish breakout target, something like this, and it's actually aligning with the 1700. So dangerous times, but as long as we're holding above these levels, we're actually doing fine. No worries. Treat this moment in time as an accumulation and distribution, right? We've been talking about accumulation and distribution, and not on bear and bull trends. As you can see, this is the zone we're currently behaving in. If we're moving between 45k and 52k, and probably going to move somewhat like this. And whatever way we're going to, probably going to the upside. That's my expectation. But as long as we're between 52K and 45K, nothing's going on. And even though if we have a small wick below to move higher again, that's no worries. Only if we have a candle close, a daily candle close outside of this zone. But this is the zone we're currently in. So 45K is no disaster, but 52K is not enough. Remember that. This is your accumulation zone. This is where you want to buy, because we've been doing the same over here and over here as well. And in this accumulation zones, remember, psychology is the way the smart money wants to take money from the retailers. And they do that by creating greed, and people start buying, and creating fear, liquidating longs, and when people start selling. Fear, greed, extreme greed at 52K, and bam, a big drop off to probably end up somewhere like here, to create another liquidation event alongside the 45K. You see, to create another liquidation event and then moving higher again. That's how the markets work. You can see it over here happening multiple times, creating greed, creating fear. Remember that. So that's important that you don't fall for that and have your stop losses or whatever at 46K, because we're probably going to wick down before moving higher. What is a realistic scenario right now? The most bullish scenario that I'm seeing is this. It's called a bump and run reversal, in which you have a bigger downtrend occurring, bumping once, bumping twice, a big sell-off, and breaking through at point C. What we're seeing right now is a similar scenario. Not sure this will be the case, but this is the most bullish case right now. You can see we're on the daily time frame having a bump again, bigger sell-off, breakthrough, and a retest. And the retest is also occurring over here, even with a bigger liquidation spike to the downside. So that's the case, but this is actually a bullish scenario, right? There's a bullish scenario in which this is most likely to be, we're being caught in a zone, we're breaking out of the downtrend like we have been doing, and now retesting. Retesting is normal, but we cannot fall below this level. So it's a bit tricky. You can see a doji. Right now, a doji is some kind of candle like this, with big spikes to the up and to the downside and a small body. And that's a candle of a trend reversal. You can see it over here as well, where we had two dojis and indicated a trend reversal. Doji indicated trend reversal. Doji indicated the trend reversal. That's how you need to look at these candles. So there's a whole strategy about these candles and what you can look for these expected movements. So this is the most likely bullish scenario. Then the bottom will be right now somewhat around 46, 45K. We can close above and then move higher. And it would be aligning with this actually. But it's bullish. And there's also a bearish case. So don't get too focused. Use this area right now to be cautious. Don't step into long positions. Buy small into altcoins, into areas of value, weekly areas, and don't jump into random shit. What else is left to say? So as you can see on the Bitcoin smaller time frame, this is for trading purposes only. You can see right now short sell-off, and we're creating a triangle. An ascending triangle normally breaks out to the upside, but and we're still finding support at the bottom. Right now it's more like this, finding support at the bottom. So these are all indications. So I've been showing 3 indications after each other that this sell-off that has been occurring isn't the worst case ever. So only worry if we go and break the 45K with a daily candle. So not a big spike of 1 hour, 2 hours, 4 hours. That's no worries. If we break the 4 hours might be, but if we break the 45K with a bigger candle, then we need to worry. Right now, if we move between 45 and 52, that's the accumulation zone. Lower, it's getting more interesting. Higher, over 53K, then we're going to start turning bullish once again. But remember, don't over leverage, don't take too much risk right now, because this is a tricky scenario, but use it to your advantage. What we're seeing in Ethereum very quickly, I'm not sure, yeah. So bigger downtrend, double downtrend, increased momentum. So Ethereum is having a tough time with a weekly buy zone right now. But if we lose this, we're going to 34, 36, probably somewhere like this, because here's a level as well. Oh, here's a level as well. But Ethereum is having a tough time. And oh, this is a drawing I made yesterday. As you can see, we clearly chose scenario B. So yeah, I always make plans, right? Scenario A, scenario B. In this case, we chose scenario B and broke out to the downside, but now actually finding support at this trend line. So there's always trend lines, always scenarios. Use that into your advantage. So if it was fairly quickly the market update as well, and the first part of the presentation as well. But yeah, due to the it's just an indication about how you should look at the market and how you should look at things and how you can use it to your own advantage. And yeah, probably it will be too much information for in such a short amount of time, but start thinking about the ways you actually like, for example, or actually find interesting. For example, last week we've been talking about day trading and swing trading. If you don't like the exposure in the market for a limited amount of time, but you want to increase your portfolio, start thinking about staking or start thinking about interest and maybe even yield farming or NFT flipping, whatever you want. So there's always opportunities for everyone that has other interests, right? So yeah, that's what I wanted to finish up with today.
Thank you, man. I don't know if there's any questions from anyone in the audience. I know it's been a lot of information, but very good stuff. So feel free if there's any questions. I don't have any, so
yeah, go ahead, guys. And otherwise, if you come up later with any questions, just send me a message in the group, and we will cover it then. Yeah, good for now. Everybody's silent. It is good or not good, but I think it's good.
I fully agree. Well, thank you once again, Quincy. As he said, he is in the Discord in the crypto channel, so you can ask him any questions also there. And that means we're going to round this off, and we're going to see what we can do next year. But I guess we'll be back at one point for sure. And for the rest, I'll talk to you guys in the Discord, and if not, I'll wish you a happy New Year's and see you 2022.
Same, guys. Have a nice New Year's Eve.
Thank you. Thank you very much, everyone.
Bye.
Thanks, guys.
Bye, guys.